Alright, quick hits on the SpaceX IPO, what's real, what's hype, and how I'm thinking about benefits versus risks. First, the headline. Reports say SpaceX has confidentially filed with the SEC. Target raise, up to $75 billion potential valuation, around $175 trillion. Chatter about a listing as early as June. That would be the biggest IPO ever by a wide margin. Why so massive? Two engines. One, Starlink. It's crossed roughly 10 million subscribers globally, shifting from expensive experiment to a real telecom business. Predictable subscriptions, expanding ARPU opportunities, room to bundle, enterprise, room to bundle, mobility, room to bundle, government services. Two, government work. Since 2008, SpaceX has racked up tens of billions in federal contracts. NASA, the Air Force, Space Force. That's sticky revenue and credibility. There's also a national security angle. The US is exploring large-scale satellite defense networks to track hypersonic threats. Think tens of thousands of satellites. SpaceX sits right in the middle of that tech stack. On the market side, top-tier banks are reportedly in the mix. Morgan Stanley, Goldman Sachs. Translation: serious underwriting power and distribution. Okay, upside for investors. Scale and cost advantage in launch and satellites. A subscription engine in Starlink that behaves like a telecom. Optionality, enterprise data. Optionality, mobility. Optionality, defense. Optionality, deep space logistics. And a halo effect. A SpaceX listing could funnel attention and capital towards smaller space names. Rocket Lab, Planet Labs. Now the risks. Valuation first. At $1.75 trillion, the bar for execution is sky high. Public markets will want hard numbers, cash flow, margins, churn, concentration risk. Elon Musk's focus is spread across multiple companies, and, sometimes, public controversies. A tweet can move markets, even if operations are fine. Supply and float dynamics. Early investors and employees often sell into IPO momentum. That can pressure the stock right when retail interest peaks. Starship risk. The timeline and economics of Starship are pivotal. A high-profile failure near the IPO could hit sentiment or timing. Macro risk, geopolitical tensions, oil spikes. Great company, bad week, IPOs can still flop in rough tape. So how do I frame it? If you're chasing growth, the clearest story is Starlink behaving like a telecom, recurring revenue. Clearer comps, a path to cash generation. If you're betting on Starship, if you're betting on deep space logistics, that's higher upside, higher uncertainty. My checklist before touching the stock: updated Starlink metrics, ARPU, churn, CapEx per user, Starship cadence and cost per kilogram to orbit, contract visibility, government deals, contract visibility, enterprise deals, lockup terms and expected insider selling, market conditions in the weeks around the listing. Bottom line, historic potential, historic expectations. If the numbers back the narrative, it could redefine the public space sector. If not, gravity wins, at least in the short term. Thanks for watching. Be smart, be early only if you understand the risks, and as always, do your homework.